In that case, we should see Bitcoin fall approximately 45% more from approximately that, breakdown level around 18,000 and change. To me, that gives me a target just below. So number one, I looked at the comparisons of FTX's blow up and the Lehman Brothers collapse in '08, noticing again, Lehman was a bank. It collapsed. An exchange, FTX, kind of like a bank, but in crypto, it collapsed. Now, how long did the S&P 500 take to bottom after Lehman Brothers? And the answer is it took about 6 months. So then extrapolate that out and say, okay, in 6 months from now, we might be seeing the bottom in Bitcoin. In big bear markets, that's where the next billionaires and millionaires are made. It's not buying Bitcoin at 65,000 and then watching it flush. So for the next bull market, the only ones I feel mentioning are Bitcoin and Ethereum. So I'll stick with two right now. So I do think inflation will remain elevated, right?
Yep.
And elevated to me means 3 to 4%, maybe 5%. So again, it's already coming down. We know it's coming down. Oil prices have come down quite a bit. That's helping bring inflation down. But the key is does it go back to 2 or under %, which is what the Fed wants? And my answer is no. The wage inflation is going to be sticky. Always keep in mind that when people get paid double what they were making, it's not like that business can double the price of an orange the very next day, right? So it has to be passed through over the course of a series of, let's say, years. And so what's going to happen is you're going to see prices incrementally move up year over year to compensate for the hike in wages that we've seen around the globe. And I think that's going to mean that inflation stays north of 3% for at least 2 years. So it is coming down. There's no doubt about it. And you will see a number that reflects that. And part of the issue here is that inflation is from the past year. So 12 months ago, how much has inflation gone up? Well, if we go 12 months ago, inflation numbers were already spiking. So what it's telling us is that yes, the inflation numbers are still going up. We're still seeing inflation, but the rate of increase is slowing. And that's what we see in these inflation numbers that are coming back in. And I think that's a common misconception. Everyone hears, oh, the inflation numbers were better than expected when they come in, but it's not saying prices are going down. It's just saying they're not rising quite as quickly. So I think investors have to be ready for that. I mean, it means that the prices at the grocery store are still going to be going up over time, just not as quickly, and it's going to hurt the economy. There's no doubt about it that investors and retail Americans in general are going to feel the crunch in 2023. I would dare say that people, this is not even close to the feeling when there's full out panic, right?
Okay.
And I think this would be seen, and I would say to you is like, is anyone really that worried? I mean, it's not fun to see your investment accounts down, but is anyone proverbially jumping out the window yet? No one's doing that. There's not this fear because we've been addicted to the Federal Reserve coming in all the time and just saying, oh, we're down 20, 30%, but the Fed will come out and save the day. What's going to happen when the Fed doesn't do that? And that's going to be where the markets really panic. Well, as a psychological trader, and part of trading is understanding human emotion and understanding that when the whole crowd, when every single person is rushing into an asset, that's usually the mark of a top. And you saw this, we saw this in 2007 with the housing market when Time Magazine featured like the home flipper on their front page. It's exactly the same thing. When you have the mom and pop saying, hey, this is so easy, I can't believe how much money I'm making, it's usually the end of the move. And then you look at the charts and you understand the massive move that has gone on, the double top that we saw in Bitcoin, all the factors out there. To me, it was one of those no-brainer scenarios. Plus, let's not forget that by November, when Bitcoin was topping, we knew the Fed was going to start raising rates, right? We already saw inflation spiking, and everyone was saying, oh, listen, inflation's spiking, so Bitcoin has to go higher. But the essence of it is inflation spiking. Bitcoin was already factoring that in. Now it had to factor in the major tightening that the Fed was going to bring in. And remember, there was so much money that had been thrown into the Bitcoin market, from checks going to Americans from the government, from quantitative easing, from all the stimulus. People were home. They weren't driving to work, so they were saving on gas money. They weren't taking vacations, so they had extra money. So all that money was going into crypto or stocks. As bearish as I was when we were at 65 to 69,000, I would say I'm lukewarm now on Bitcoin.
Okay.
It doesn't mean I think the bottom is in, but you're right. Let's take a look at the chart of Bitcoin. This is something I want to show you guys.
Yeah.
So here we have, this is the drop on the Terra Luna collapse. And we dropped from about 31,000 and change down to about 17 and change. And so that drop was about 40+%. Now, if you look at the collapse of FTX, Bitcoin only dropped 25%. And so you could argue that FTX was a much bigger blow up in terms of institutional money being involved and kind of the earthquake that it caused, yet Bitcoin dropped less. And so to me, I take that as a signal that says, okay, it's not the end yet, but we're getting there. And so a couple of the analysis points. So number one, I looked at the comparisons of FTX's blow up and the Lehman Brothers collapse in '08, noticing again, Lehman was a bank. It collapsed. An exchange, FTX, kind of like a bank, but in crypto, it collapsed. Now, how long did the S&P 500 take to bottom after Lehman Brothers? And the answer is it took about 6 months. So then extrapolate that out and say, okay, in 6 months from now, we might be seeing the bottom in Bitcoin. And the reason you can kind of extrapolate this out is because human emotion, you could say, oh, well, that's stocks, this is crypto. But the answer is it's all the same. And the reason it's the same is because humans, you and me, we're the buyers and sellers. And does your emotion change? Does my emotion change? No, greed and fear. It's what rules the market. In that case, we should see Bitcoin fall approximately 45% more from approximately that, breakdown level around 18,000 and change. To me, that gives me a target just below 10,000. And keep in mind that max pain is caused when even numbers are broken. You'll see a ton of stops run at 10,000. That could be the bottom when it breaks into the 9,000. So then number one is personal discipline. So you have to be a disciplined investor. Yes. Number two is human psychology. Yes. And that's this part where charts will match up. History repeats generally, or at least rhymes, because of the human emotion and the human psychology. And the last is understanding how to read that through the charts. Mm-hmm. I think Bitcoin is starting to get into that mode of being between the two, right? So I think what you're going to see, and this goes with the predictions, right, for 2023, where the NASDAQ and the S&P are going to continue down. But what I'm saying is Bitcoin's going to actually bottom out and actually start to turn up in 2023. So that means it has to decouple from risk assets. And the key to this is going to be regulation. As much as everyone hated the idea of regulation in crypto, now we see an FTX scenario and everyone's saying, all right, well, you need some transparency. You need audits. You need to see the books on these players. There has to be rules where they can't take customer funds and put it in other places. And I think that's going to be the key that really starts to trigger Bitcoin's next move up, is when you get regulation, institutions will finally start to come back to invest in Bitcoin. Okay. And remember this, right? Before it wasn't popular with people. Now people have been burned so much that it's popular. That means the politicians will act. People always remember, everyone, always remember that in big bear markets, that's where the next billionaires and millionaires are made. It's not buying Bitcoin at 65,000 and then watching it flush. It's when do you have the guts to step up in a bear market? I never buy the exact lows and I never sell the exact highs. Right. I just need to get close, and if you do that consistently, you make millions. Right. Of course. So I think this really broaches into something else, which is the CBDC, right? And I think if you look at a central bank digital currency, that could be now an issue for some of these stable coins. All right. So again, stable coins, there's no scarcity to them. They're basically just pegged to the US dollar. You get a CBDC where it becomes just as fast to move currency around, and then that could be an issue. Now, I think that Bitcoin will ultimately kind of surpass everything and be fine. But again, it doesn't mean there won't be some rocky roads there for sure. I still think, again, most cryptos won't survive when we get out of this period, but you'll see the top 20, 25 at least survive and thrive. Okay. So I don't think that you'll see necessarily it reverse. I think that as the stock market in the US, which has taken in more money than any stock market globally, any asset class globally in the past, really 13 years since 2009, as you start to see less returns being generated, money will have to go towards other markets, including gold, including Bitcoin, once you get regulation in Bitcoin. So I think that there's plenty of money there in a prolonged bear period for gold to thrive and Bitcoin to thrive. Mm-hmm. I think if it survives, yes. And I think investors have to really think about what they're investing in, because remember, we don't even know what's a security, what's a commodity. If it's a security, which is basically almost anything but Bitcoin, what are the rules that are going to be applied? What's the level of entry? Remember, to be listed on the NASDAQ, it costs a lot of money. So I have a feeling that there's going to be costs, like levels to entry. And there's going to be a lot of coins that can't handle that, including the transparency side. Yeah. And we don't know this. And again, you go through something like Terra Luna, you go through something like FTX. As an investor, those were mega market cap cryptos. You have to be really careful, and I'm sure there are more, things to fall here. I really hope that they do come out with a real ETF. I think that would open and be a huge bull factor for Bitcoin. Don't expect it before regulation, but yeah, I think that I still remember that vividly because we talked about how in 2017 they launched the futures, right? Mm-hmm. So they launched the futures when Bitcoin was at its all-time highs, and then here, and when Bitcoin was at its all-time highs, they launched the spot ETF or the ETF. I don't think that Bitcoin will be done. I think there's inherent need for someone or something to be there that we can invest in or at least store our money in. But I do think that other cryptocurrencies are going to struggle. Well, so for the next bull market, the only ones I feel mentioning are Bitcoin and Ethereum. So I'll stick with two right now.
Okay. All right.
Because if I say anything else and it'll come back to haunt me. There'll be a clip. Yeah, so I don't think it's an issue for Bitcoin. I think that, again, anything the central bank produces, they're going to have their finger on the printing button, just like they do with fiat currencies. And it's just going to be like, okay, well, do we need more? Well, let's print more. Now let's take some away. And so it doesn't solve any of the issues that Bitcoin potentially solves as the digital gold, right? That scarcity aspect. So if I'm looking at that, I'm more concerned about the stable coins and how does that fluctuate with them? How do they handle that? Mm-hmm. It's not quite as easy as that. I think there's a lot more that goes into it. Right. But what you'll see is if I'm correct that we bottomed sometime around May of 2023, that almost puts us just a little over 6 months out from that event. And I think that would just be a positive. But for me at this stage, the only thing that matters for crypto is regulation. And again, you got to get that in there because again, you could be the biggest fan of Bitcoin. If institutional money doesn't come near it, it's never going to 100 or 200 or 500,000. Mm-hmm. As a trader, it's so important for us to not only look at our best case scenarios, but our worst case. What if we're wrong? How do we maneuver? How do we trade around our positions? And in essence, is if this was really the .com collapse, and let's say Bitcoin is the Amazon.com of the crypto markets. Right. Amazon dropped 95%, which puts you back at 3,500, which happens to be the pivot low support from the last cycle low. Bear markets give you one of the best opportunities to buy. In fact, I think 2023 is going to be even worse than 2022 in terms of downside in the stock market. But there are places to go, right? There's gold. I mean, gold, again, great performing asset. It's if you look at back and compare the 70s and the early 80s in gold, it's an amazing replication of what we're seeing now, yet we just haven't started the big move up in gold that should be coming. So there's lots of places to go. And I would say this is that, in general, long-term investors have had their field day since the Fed began bailing the markets out. It's now becoming more of a trader's market where you buy, but then you can't just say, hey, I'm going to tuck this away for 20 years. You want to actually just take the profits and run and then look to rebuy on the next dip.